Checkpoints is presented by pharmaceutical company GM Pharma.
Georgian tax law has recently amended. The new law changes are related to requalification loan as capital contribution. Please explain what tax consequences businesses should expect as a result of these changes.
Hello, Shota. If a tax authority of Georgia requalifies intragroup loan as a capital contribution, that means that interest imposed on such a loan will be automatically requalified as a dividend. In Georgia, payment of interest is subject to 5% withholding tax, which can be further decreased to 0% if relevant taxation agreement is in place and applied. But dividend is subject to 15% corporate income tax, and plus potentially 5% withholding tax on dividend will apply. So in short, 0 to 5% rate will be changed to 15 to 20% tax rate, and difference will be levied on company plus penalties and late payment interest. This was regarding the requalification interest, but the tax implication may also be resulted from principal amount. Because if a loan is requalified as a capital contribution, then it's already important what was the exchange rate at the moment of lending the loan and exchange rate between foreign currency and Georgian lari, then the money was taken back by the lender. Yeah? For example, if a German company lends 1 million euro to its subsidiary Georgian company, and when the exchange rate was 3 to 0, that means 1 million euro was equivalent of 3 million Georgian lari at the moment of lending the loan. But if I take the loan back after, let's say, 2-3 years, and the exchange rate was 4 to 0, 4 million equivalent in Georgian lari, in case if tax authority will not requalify this transaction as a capital contribution, German company can take out fully 1 million euro without taxation. But in case if tax authority requalifies as a capital contribution, in that case, 1 million difference between 4 million lari and 3 million lari will be taxed by corporate income tax, because capital contribution is fixed at the moment of contributing in a Georgian lari and is not revaluated based on exchange rate. So just to sum up, the tax result will be faced as a by requalifying the interest into dividend, and also because of exchange rate regarding the principal amount.
Yes, and what important aspects business should be aware regarding this new law?
Yes, first of all, it should be mentioned that the transfer pricing legislation was amended. So this is 423 decree of the Minister of Finance. The law says the law introduced a new list of criteria for the process of requalification of the loan as a capital contribution. If at least 3 of those criteria will be satisfied, the Georgian Tax Authority will have a right to requalify the loan as a capital contribution and the interest imposed on the loan as a dividend. So at least 3 criteria should be satisfied. Plus, such approach will not apply on interest imposed before 2025. So now companies have time to reevaluate, assess their transactions, understand the risks, and minimize if possible. Okay.
Yes. And what advice would you give to businesses affected by this new law?
So if a Georgian enterprise already has received the loan from its associated non-resident company or from any offshore-based company, that means this transaction is already risk factor, and they need to assess the risk related to this loan. Okay, they need to evaluate each criterion provided by the law, and if they see that at least 3 criteria may be at least theoretically satisfied, that means that it's already risk factor, and they need to use that time, the transactional time, to either eliminate risk if it's possible, or at least decrease as much as possible. So this is a moment when they need to use to manage their tax risks.
Yes, thank you for your answers, Gela.
Thank you too.
The Checkpoints is presented by pharmaceutical company GM Pharma.